Hey guys, happy Monday. It was a cloudy morning, which I enjoyed very much, and thought it would still be cloudy right now to give you this update outside, but it is not quite as cloudy and cool as I hoped. It's actually 91 degrees and it's a little bit, getting a little bit muggy. So we'll see how long I can last out here. I'm sure long enough to give you a good update. So let's get into it. And before I go there, let me remind you, please subscribe if you're not already subscribed to my channel. I give market updates every Monday with all of this information you need to know about the Phoenix real estate market, and show a whole bunch of other things too, like neighborhood tours and home tours and all of the fun things that have to do with real estate here in Phoenix. So make sure you subscribe. Plus, my dogs are always a part of it every now and then. So that's fun to see, right? Cleo's actually inside enjoying the air conditioning. So it's just me and Zoe out here today. All right, so let's talk about the CMI. Every week I talk about the Cromford Market Index. I get this information from the Cromford Report, and they analyze MLS data on a daily basis, provide that to their realtor subscribers so that their subscribers can then share that with their clients. So I share that all with you guys. So this information is analyzed from the MLS. The Cromford Report's been looking at data for the last 20 years, so they have historical info that they take into consideration, and they're mathematicians, so they're able to create all of these awesome charts and graphs and projections for us to use as we consider making moves in the real estate market. So that's where all of my information is coming from, and they have a proprietary what is the word I'm looking for? Proprietary index called the Cromford Market Index, or the CMI for short, and that's what we talk about every Monday on this channel because I give you guys this update, which you love. So the CMI is a indication of supply and demand. I'm sorry, I'm getting distracted because she's trying to catch a fly, I think, and she is just like okay, anyway, supply and demand in our market. So anywhere between a reading of 90 to 110 is a normal or a balanced market. Anything above 110 is considered a seller's market. Anything below 90 is considered a buyer's market. And we've been way above 110 for a long time. We're sitting today at 356.3, and we used to be at like 515. So we've come down quite a lot, but still remember, anything over 110 is a seller's market. So 356.3 is still a very strong seller's market. This CMI has actually come down only 36 points in the last month, and we were coming down at 50 points per month. So it actually slowed down in its decrease quite a bit, and we'll see if that continues. But one of the reasons that's happening is because our supply has increased, and our supply today is sitting at 30, which is 70% below normal. Supply used to be at like 22. It was 78% below normal for the longest time. I continued to say that week after week. So being up to 30 is a pretty big feat, although we're still 70% below normal. And our demand is sitting at 106.9, which means it's 6.9% above normal. And that demand actually increased, which I find interesting. The last 2 weeks, if not 3, it has increased, where before it was declining ever so slightly. So to see an increase in demand is interesting, and I'm curious if it's because we just saw a decrease in interest rates. Likely that's what increased demand, but with what I'm about to tell you, you're going to wonder why demand increased. But before I get there, let me just say, at the rate that we're going on the Cromford Market Index, sitting at 356.3 and declining 36 points per month, if that continues, we'll be in a balanced market in 7 months, which is March. A few weeks ago, I said we'd be in a balanced market by December because we were declining at 50 points per month. So you can see this changes. It's very hard to anticipate when we'll be in a balanced market. All I can tell you is where we are now and what the pace is currently as far as the CMI declining. because the second that supply and demand change at all is when we start to see the CMI adjust based off of that. So there's no certainty I can give you, but we can kind of see how quickly things are moving with the CMI and make a reasonable expectation of what the future may look like. So at this point, 7 months until balance, but that's assuming everything stays the way that it does. So here's the big news, okay? Our prices have increased. That's no surprise to anyone. And they've been increasing significantly. Our appreciation rates have been crazy. And what has this done to affordability? Plummet. So our affordability rates, plummet is not the right word, but affordability is now lower than it was before, and it's outside of the affordable range here in Phoenix. And what's even more shocking is that our affordability in Phoenix is lower than the affordability rate for the US on average. And we've always been higher than the rest of the US, or that average rate. And so this is one of the first times I think that we've been below the average US affordability rate. And here's how it works. So for a family that makes the median income in Phoenix, they can afford 60 to 75% of what sold in the last quarter in Phoenix. That means that affordability is in a good range. So they measure that by 60 to 75 is the affordability range there. So if a family making the median income can afford 60 to 75% of the homes that were sold last quarter, then we're solid in terms of affordability. We just dropped out of that, and now we're at 56.4. So a family making the median income in Phoenix can only afford 56.4% of the homes that were sold last quarter. When you look on the national scale, that number is 56.6. So we're just slightly below national, but still, we're below and haven't been in the past. So all of this price increase and high demand and low supply has bumped us just out of the affordability range, the comfortable affordable range. We're not in any drastic situation, but it is big news. It has changed for the first time since we've been tracking this, or since I've been tracking this the last few years. So not surprised, kind of saw this coming the way things were increasing, but just something to note. And then next quarter, we'll have an update on this because they look at it quarter by quarter. So it'll be a bit until we have new data on the affordability rate. But for now, breaking news, we are outside of that here in Phoenix. Talking about appreciation, our appreciation rates are going down. We are now under 30% appreciation. I know, rough time. If you're measuring appreciation by the monthly average dollar per square foot, we're sitting under 30%, and that number peaked at 39% at the end of May. So you guys, we're gonna be okay. A normal appreciation rate is whatever the rate of inflation is, which is around 5% right now. So 30% is still really, really good. But we've been riding this huge wave of appreciation for so long, it is bound to stop or at least decrease. So all of this is just part of the market shift that we're seeing. Appreciation rates are going down. Our affordability has fallen out of the affordable range here in Phoenix. Our days on market has increased to about 7 or 8 as the median from 4 to 5. And we're seeing more list price reductions, which means sellers are listing their homes too high and realizing that no one's biting and they have to decrease the price of their house. From a listing perspective, that's very different than the closed sales. Our closed sales prices are still very high, but the list prices we're seeing a bit of resistance, and so sellers are, price deducting on their listing price. So these are all things, like I said, that are showing that our market is shifting, and we're seeing this in the data. So that's kind of where we stand, and that makes sense as it relates to the CMI because that is showing the softening as well. So that's about all I've got for updates. A couple quick things not related to what I just spoke about. Just a call out. Cave Creek is still moving in the direction for sellers. The CMI is still high and it's increasing in Cave Creek. It actually has increased for the last 7 weeks. It's the only city that's been doing that. It's sitting at 493.4. And that's because their supply has declined and their demand has increased. So Cave Creek is kind of an anomaly right now. Casa Grande is the other one that's interesting. Right now, Casa Grande has more homes available for sale than they did this time last year. And I think that's the only city that has more homes available now than last year. So interesting to see that change. And I think that's it for my updates. So hope this is informational for you. If you have any questions, reach out to me, call, text, or email. Make sure you subscribe. And if you want to just chat about real estate, you can schedule a time to chat with me using the link in the description below. Sorry Zoe didn't make more of an appearance and Cleo's in the AC, so not going to happen this week, but I'm about too hot out here right now. I'm going to head in. But thank you for watching, and I hope everyone has a great week.